Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started. Good morning. Today is Tuesday, January 11th, 2011. So I guess today is 11111, or whatever it comes out to be. You get the idea. But this morning I'm talking about Mother Nature Unleashed, and specifically I'm referring to the flooding that they're seeing in Australia. They haven't seen flooding this bad in close to 100 years, and it's really taken a toll on the economy so far. The Aussie's been lower, trading there. We can just take a quick look here on the 2-hour chart, Aussie versus USD. You can see it's been in quite a downtrend after it broke a little bit of near-term support there at parity. Okay, we're trading lower. All right. Now, also, that's affected the trade balance figures in Australia as they came in lower than expected. So this is really a major natural disaster that's going on there, which is going to affect the economy, which will probably leave the RBA on the sidelines for a while as far as rate hikes are concerned. All right. Now, we're also seeing some weakness in the Kiwi as well. All right. Now, they just came out with some figures that show that while they may have avoided recession for now, all right, the economic data points have picked up a little bit, but they're not in an expansionary phase right now, so we're probably not going to see any rate hikes out of the RBNZ anytime soon. Home building approvals did rise 8.8%, and improved business confidence was going to help GDP figures, but we're going to need to see those readings first before anybody thinks that RBNZ is going to move on rates. So what we're seeing then is we're seeing money flows as a result flow to the loonie. Take a quick peek here at the loonie. All right, just real quick, I just want to zoom out a little bit, show you quick. On a 4-hour chart, we've got a possible head and shoulders pattern happening here. Here's your first shoulder, here's your head, here's your second shoulder, and we've got a neckline right at about 75 cents there. So if that breaks, we're going to see a retest back to 74 and potentially a little bit lower here, down to 73 on the daily chart. So that's what we're looking at there. Now, the Kiwi's higher now. We have oil prices higher. We've got increased U.S. demand as the U.S. economy is stabilized a little bit. We also have this oil situation going on now with cold weather in the East Coast here. Okay, we've got snow coming in. People are thinking, hey, that may affect demand for heating oil, which is going to help create demand for oil prices. And then we also have this potential supply slowdown going on because of the Alaska pipeline situation, which is still uncertain. So right now, market expects that Canada is going to be the next to raise interest rates based on improved outlook. So what you see is money flows leaving both the Aussie and the Kiwi and moving towards the loonie. And you can see here in the Aussie, okay, that's the biggest loser today, Aussie versus Canadian, and then also the Kiwi versus the Canadian as well is the next biggest. So we've got money flows moving to Canada. All right, now we'll just take a quick peek here at Aussie versus USD. Just showing you this on the 5-minute. All right, it looks like we had some euro strength early in the morning, but now we're giving back some of those gains. Okay, overnight Japan said that they were going to invest in European bonds to help stabilize the situation. Well, don't kid yourself. The Japanese are actually looking for a little bit of yield seeking. So you get current yield now with some of the bond issuances and the debt issuances coming from the PIGS countries, all right, and also with these euro bonds that they're going to unleash that are going to most likely be AAA rated. So there's going to be some yield seeking going on there for Japan, so that's why they're going in there. And then, that just provides another bidder in there, which means that rates probably won't get as out of hand as they could have been if just strictly left to the market and the bond vigilantes. Now, we talked yesterday about the Portuguese situation. Well, Prime Minister in Portugal came out and said that they don't need any additional funding as of this point. Quick peek at the pound. Pound was higher then lower, now back lower a little bit. Retail sales figures came in showing a decrease of 0.3%. This is ahead of Thursday's BOE rate policy decision, which we're going to wait to see if there's a statement accompanying that that changes sentiment. But no surprise here, austerity measures kicking in. All right, and lastly, let's look at dollar yen. You can see that yen is weak today. All right, as it looks like Japan is going to be doing their own carry trades. So if they're going to sell their own currency and buy the currency of some of the higher yielding countries, then we could see some money flows going there. That could also provide additional weakness. So rather than doing their own interventions and their own quantitative easing, they can actually start doing some carry trading. So we're going to have to see how that happens. So we've got some crazy weather happening around the globe here. We talked about the flooding in Australia. Blizzards expected here on the East Coast, and this could affect the economic picture a little bit. We have U.S. Stock markets higher today. We have our earnings season starting. By and large, earnings come out looking pretty good. So we are seeing a little bit of dollar strength. Now, we talked about how the correlations have flipped. Where it used to be risk-taking, where dollar was weaker when stocks, commodities were higher. All right, now we're actually seeing some dollar strength when this is happening. So that could be a function of what's happening with the euro and pound weakness versus USD. So, that's kind of what we're looking at right now. You just got to remember that, there's going to be some countries that didn't, the big recession didn't affect them as much. And as a result, they grew rather quickly. But now they're starting to slow back down as the countries that were slow to grow are starting to come back. So, when I think of, what's going on in Australia, while this flooding is it's an awful situation, it's probably a good thing just to kind of slow down the Australian economy a little bit, and they can do it without actually having to raise rates. In the meantime, you got the U.S., who obviously is very slow to respond. All right, we're still in expansionary phases. You got the UK; they're putting on austerity measures. So it's going to be interesting to see how this plays out. But my guess is that we're going to start to see a little bit more balance around the globe as money flows make its way to the best performers and starts to leave some of the worst performers. So if you're a Forex trader, man, and you can get ahead of that curve, your bank, your trading account balance is going to thank you. So that's what I've got for today, folks. Good trading to all. As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.